The stock market that I entered in 1984 in March no longer exists. In fact, for those that still watch that CNBC and they're broadcasting from the New York Stock Exchange, that might as well be a museum because even so little of the actual trading is done down there. But what's changed dramatically, and this is very, very important, perhaps the most important thing I can share with your audience. In 1984, 87% of the trading was retail investors. Institutions were 10 or 12 or 13%, something of that number. Most people went into the stock market for what it was originally created for, a place to buy and sell part ownerships of businesses. Last year, over 50% of the money now in the stock market is in passive funds. These are funds that are just basically tracking indices and indexes. They're not actively managed, meaning the manager, he or she, doesn't have discretion to sell individual stocks within them, but their job is to buy the stocks and sell, if it comes to that track that particular index.
Hello everyone and welcome to another edition of CEO and Market Expert Interviews. I'm your host Lucian, most of you know me as Triangle Investor from social media. With great pleasure I am announcing my guest today. He is a known name and financial expert with over 40 years of experience on Wall Street. My friend Peter Grandich, welcome to my show, or how we say in Croatia in the language of your ancestors too, dobrodošao, welcome.
Well, it's always a special treat talk to you, especially after when you first interviewed me and then sent me all the information about where my grandfather, the island of Silva, is from. And as I told you before we started, the plan is to actually come and visit sometime in 2026. So I look forward to it.
Yeah, and when you come, we will do the live interview from the coast with beers on the table, and we will do it that way, Peter.
Well,
But for now, we have to do it this way.
Let's start the interview after the first beer, not the fourth or fifth.
Agreed. Peter, I want to start with your views on Trump's presidency in his first 30, 40 days. What is good, what is bad, and especially how do you see his policy towards Canada and his intentions going forward?
So I get the worst of all worlds because I'm not a full MAGger, my wife is, but I'm also not an anti-Trump person either. That gets crazy if I just hear his name. So I don't seem to please either side of the spectrum, which really is on Trump. Either you like him a lot or you don't like him a lot, and some people despise him. I think one thing he's did that don't even need one hand to count on in all the years I've been an adult is he's one politician that actually got into office and did pretty much what he said he was going to do. I think he's got to be credited with that when most others fall way short of that. I think in some instances he's done well. I think he's brought some of the biggest concerns we had here in the States. I don't think it's limited to the States. One with immigration, two with wokeness and all. A lot of that stuff has changed for the better. Where I don't concur with him, and I disagree quite harshly, is with tariffs. Now, I still think the tariff talk is more of a negotiating point for him. And we'll see and we'll know within a few days or a few weeks if that was the case. I don't think it's beneficial for anyone, trade wars. I don't know anywhere in history where one side can point and say, wow, we really did good with that trade war. And what I'm especially troubled with is how we are treating our neighbor to the north. The United States and Canada are not only still the two world's biggest trading partners, but it's not very easy to tell when you're in one place or another. There's so much commonality, and I really think I wouldn't want the Premier or the Prime Minister of Canada saying he wants to make the United States part of Canada. And I think it's an insult to the people of Canada to simply say, well, you should just become our 51st state. I do think that one of the issues that's come out is how severely bad, not only the debt level, which is clear and evident, but how severely bad money was being used here in the United States. If you think about this, there's 74 different divisions of the government, and each one had an inspector general. And all these years, none of them have seen the things that just in 5 weeks Musk has identified as very poorly spent money for things that I don't think most taxpayers would want to see a dime going towards. I think that's been a benefit, but it also has opened Pandora's box, and it's given a concern that if you think about this for our country, we're a country that always used to look around the world and go, oh, that's a banana republic and they're crazy. We're basically a banana republic. We have a house of politicians that make a couple $100,000 a year in pay, and they leave worth tens of millions of dollars with not having another job, and they were overseeing all of this. So I think net, if I was a Magna person, I guess I feel pretty good. But I think the challenge is ahead. And one last thing, I commented today. There's three issues that I think override everything else in the U.S.: our debt crisis, our retirement and aging crisis, and an infrastructure and natural disaster crisis. And the biggest one, the debt crisis, Trump does not have a history of looking to save money. He likes to spend money and use debt. And sometimes in his own business, he's taken on too much and it caused bankruptcies and all. And I'm afraid that what Musk said the other day is very true. If we don't act fast and act aggressively, this country will face a bankruptcy scenario. And I just can't imagine what the world will be like if the United States gets to the point where people don't want to lend it money anymore.
All good points, Pete. Agreed. Let's talk about the gold. 3,000 gold was considered not so long ago crazy. Now it is pretty normal. Do you see 4,000, 5,000 gold? And actually, is there any craziness in gold price since we are living in the world that is going nuts? So 4,000, 5,000, it's not crazy anymore, right?
Well, I was called crazy by my wife, starting with my wife back in 2021 when I decided to sell all my general equities but one and put it all in physical gold because I thought gold was going to go up more percentage-wise than stocks and bonds. And it did. And that was not something that most people should do, but for myself. And if you look at it, not only over the last few years has it outperformed stocks and bonds, but for the entire millennium. Since January 1st, 2000, gold has outperformed both stocks and bonds. I think there's a couple of reasons, and I think those reasons still remain solidified with an additional bullish reason added lately. The main reason, first of all, that I got involved a few years back was the fact that central banks went from aggressive sellers to huge buyers. And it coincided at a time when their central bank, many people call the Bank of International Settlements, the central bank's bankers, made a dramatic change and made gold a tier one investment. And I think that was coinciding because they knew that somewhere down the future, gold is going to have to be used to restructure all the debt that's in the world. I think that was their first main goal. The second was the BRICS. I became a big believer in the BRICS. In fact, I think Trump has actually became a great marketing tool for the BRICS in terms of people seeing how basically he's announced that if you don't deal with us, we're going to break your kneecaps. And, I think that's going to come back to haunt them. But that was the second reason that they were acquiring it and have openly spoken about not a new currency that's going to replace the dollar, but a way for those countries to exchange goods and balance of payments will include gold. But the third one, and this is the real kicker, and this is the one yet that we don't know the real answer to, but seemingly all the possible answers are bullish for gold, and that is the great amount of transfer of gold into the United States. Let's not forget that we've already seen 34 countries repatriate its gold from both London and New York over the last 10 years. But now we've seen this dramatic change. And then for Trump, it's sometimes hard because he's a master craftsman in terms of wording and saying to structure how he plans on to deal. But why do you want to bring up something that the few of us, the small amount of people that are in the gold market on a day-to-day basis have talked about for years? Is the gold still at Fort Knox? That's always been a discussion. Ron Paul has always brought it up. But we were always suspicious that why don't you just end that thought by just having a full audit? If it's all there, you should have no problem. Come in, look, get that in peace of mind, and yet we know that that's been avoided. And why open that door and bring that up? It sets us up for. We had a big thing several years ago. We have here in the States a popular guy that used to be on television a lot called Geraldo Rivera. And he did this big thing about Al Capone's mystery vault. And it was live, and they went, and when they opened it up, nothing was there. Now, it made a lot of jokes about him, but the ratings went through the roof. I can't imagine that we think it's beneficial for our president and us to be there and open up and see that there's nothing there. I don't know how that proves to be beneficial. Why do you want to do that? Why do you want to bring that out? So I have a suspicion that they don't suspect that there's nothing there, but I do believe that they recognize that gold is going to have to play a role in helping not only the United States but the world. And this talk about rebalancing it to a more current price certainly would be helpful in what the United States faces through its great debts and deficits. So the correction, which 2 weeks ago when I talked about a correction upcoming in gold, I get these hate emails while gold's going through the roof and all. And it's actually much beneficial for your $4,000 or $5,000 gold for us to build a base below 3,000 now and then go through it and not have it just blow up and not continue and everybody have disappointment. Let's not forget, it wasn't too long ago that we didn't think it would get through 2,000.
Yeah.
And now we were approaching 3. So I'm very constructively bullish for it. I don't even know if this correction will last as long as it needs to really build a base. But the risk is probably $100, maybe $150 lower. And the reward is still hundreds, if not thousands, higher. Understand this. I think this is missed in all of this. Until a month ago, the United States investment community were net sellers of gold. They were actually liquidating what little they have. I'm certain that if we went into any financial service industry anywhere in the United States, and I think in Canada as well, and we were able to look at the portfolios of the people's holdings, I don't even think half of 1% have any exposure to gold. They have a lot of exposure to the stuff that that people talk about in the industry, stocks and bonds and crypto until most recently, but there's still no real ownership of gold. And so that's why I still think after a needed and healthy correction consolidation, we will be talking about a 3,000 and something price. And then whether or not 4 or 5,000 comes, my friend, it's all going to be based on what comes of this action or actions of why this gold has been transferred. We certainly know that whatever it is something that's being prepared for. And I can't seem to find a reason for it to be a negative. I can only come up with positives.
Do you believe, Pete, that the governments around the world will dare to take the part of the gold that people hold? I mean, in the form of taxation or other form. What's your take?
I don't think, you can never say never. First of all, I think things are a lot different now. First of all, there's not a lot of places that have it. The main places that have it outside of the United States are countries that are moving away from the Western world. That's why the BRIC nations and Russia and China. Look how the citizens in China are lining up to buy gold just as Americans are looking to go spend more money that they don't have in a mall on the weekend. The Chinese are going to malls and buying physical gold. And I think that's encouraging. I think their government wants them to do that and all. So I don't see seizure as anything to be concerned about. You can never say never, but I don't think there's anything to suggest that that is something that will take place.
Okay, I saw in one of your interviews that you sold some of your physical gold to buy junior stocks. Did I get it right?
Yeah, that's Riverboat Pete. So Pete Grandich, who always had a flair for speculation, and speculation and gambling is the same thing. There's no difference. Sold physical bullion to buy junior resource stocks. And other than one, which is my Albatross, a stock that just keeps going down that I spoke so highly about for a couple of
Arizona.
years, the rest of them have moved up fairly nicely. We have all the conditions now. There's no more excuse for those that like junior resource stocks anymore because all the conditions have been met. Physical metal has done really well. The majors now are producing record cash flows and have begun to use that in M&A. We just had a merger announcement here in Canada where two companies are going to come together to end up being Canada's second biggest gold producer. We're seeing the junior market lift off the bottom. We can judge that by looking either at the GDXJ, which is well off its lows. We can even see the Canadian Venture Exchange lifting off its lows. So the ingredients are right now, and the last missing ingredient where all speculators seem to be in one place in the crypto world, that market has finally seen that the emperor doesn't have the clothes that some of the marketeers wanted them to believe. And that was a necessary ingredient to take some of that hot air out of that market and start to see some people shifted to the junior market. So as you and I sit here today, this is the most optimistic point I've ever been in for the junior resource market, including why I'm now looking back, and I don't want to take it away. I got a feeling it was one of your questions, but why I'm looking again at the uranium market as well.
We will come to that, Pete. Don't worry. First things first, I would want to ask about the juniors. Yes, agreed. The tide is changing among the juniors. But what I noticed recently that majority of them have difficulties in raising money, and I would dare to say that only the quality name juniors can raise money with strong names or groups behind them that are willing to finance them. All other are having troubles to raise money. Do you see that as well?
Absolutely. In fact, for full disclosure, which I live off of, I pride myself on full disclosure. Not only did I narrow where I'm investing to just North America, but I'm only investing going forward for the last year or so when a certain party that's involved with the company, there's a man named Michael Gentili who's become very involved in the junior resource market, tens of millions of dollars of his own money, and basically he is only financing and putting his money in those type of companies. You know, I'm not the first person that's going to say this and won't be the last, but if a third of all the junior resource stocks that are listed and still technically exist disappeared, it would be the best thing for the rest of the junior resource market. They've always been around. We talked a little bit about someone before and about the town that they were from. And a lot of those people from that town had lifestyle companies. They find a little patch of land, they raise a little money, they keep paying themselves, doesn't work out, they restructure it and so forth. But I think those things are on fumes. And I don't think whatever money comes in, they'll be able to attract a lot anymore. There's a couple of things that play into this now. First of all, the junior market, in my opinion, is smaller today than it was 10 or 15 years ago, both from individual investors and institutional investors. There's a handful of major mining concerns, mining desks, funds, certainly here in North America. I can't speak too much about Europe. That what used to be many more several years ago. And one of the big things that's been a negative and why it's been difficult for the legitimate junior resource company is they used to be able to build their business around what we called gold brokers, or now financial advisors. Those were financial advisors in North America who built their part of their book of business or all their business around buying and selling junior resource stocks for their clients. But that has been basically gone the way of the dinosaur because there's no more commissions. No one pays a full service commission anymore. If they do, it may be a handful of people that do that. That's been a big challenge for the junior resource company because When they got one of those people, guy or gal, they got 50 to 500 of their clients. So even if all those 50 or 500 clients are still playing the junior
Yeah.
resource market, now that junior has to get to them almost on a one-to-one basis. They don't have that intermediary. Now, some people have moved towards like a great service like yours and others that are internet-based, and they talk about these things and they build a following, and then companies hope by working with them they get. But it's a bigger challenge now. And the other thing that's been challenging is the regulatory. In here in the US, even if it has an OTC symbol, even the discount brokers now are not allowing their clients on an unsolicited basis. They don't even allow them to buy that stock. So it's much more difficult. This is not a cop out for the junior resource industry, but it's far more challenging now to be a junior resource company. Listen, I can remember, we have the big PDAC coming up. I don't go to those things anymore, but I remember going to a show hoping, please God, if gold could just get to 350, we'll be okay. And here we are at 2850, and yet it's harder now to run a junior resource
Yeah.
company than it
Yeah.
was when gold was 350.
Yeah, definitely spot on. Let's touch on uranium. Is the uranium market back on your radar screen with the pullback we had in uranium equities? And if yes, what kind of equities stocks are you looking for to deploy capital?
Well, one of the reasons why I enjoy coming on your show, other than the Croatian, is that you're a legitimate, honest, loving person that has
Thank you.
recognized that industry and you do honest work. But part of the problem why I got out, and let's understand that I never played the uranium market, and it was about 2019 that Lobo Tiger spoke about it, and then Giovanni spoke about it, and I said, last time I remember, uranium was 100. What do you mean it's $20? It was under 20, the price. And I remember Cameco, for what little I followed, I said, that was one of the best. It's $8? That's really what got me involved.
Yeah.
And when I did get involved and I started to buy them, I made a decision that there's a uniqueness in the uranium market that I think is very important for people to understand. Unlike any other metal, you can count on your hand the public producers that you can invest in. Whether it's gold, silver, copper, nickel, there's dozens, if not hundreds, of public companies that are
Yeah.
producing and man. So that was the uniqueness. So I made a decision that I was going to focus only on the companies, other than one that I got my head handed into, that produce it or physically started to own it. And at that point, Sprott was the first group that basically came out with a way that you could own the physical bullishness. And so it ran up, and I think that's how we started to meet. And then it got to over $100. And here's what got me out. And this is a good point now because I think this is a bullish factor. Every 5 minutes, there were people on the internet with rocket ships and all these things about uranium. It's going to 200 and all these little junior companies and all. And one of the things that's a negative for the junior resource market in general, not just uranium, we become too short-sighted in this because we spend too much time on the internet, Twitter and all, talking about these things day to day. And because we talk about it so much, we've shrunk the expectation time on the success that we're expecting, when in business it takes a lot longer. So disappointment seeks in pretty fast. And then when it does, the same people that were launching rocket ships are now making fun of ownership and all. And it just creates a psyche that's very, very poor. And I witnessed that in uranium now. I see more of that negative, throw in the towel type of attitude. It came back tremendously. The bullishness for it is this. I don't think the argument has changed. The physical reason to believe why uranium should be an in-demand metal is as strong now than it was 2 or 3 years ago. What's changed, thankfully, for someone like me at least, is the excessive optimism that was involved in it is dissipated or gone and is now going to the other side and making things starting to be undervalued potentially again. Now, here's where it is for me. I am concerned about the general stock market. And since I'm still going to go back and focus on the main producers if I do go back in, they will be impacted if the stock
Yeah.
market in general has a decline. So I'm still hopeful, not expecting. There's a difference between expecting and hopeful.
Yeah.
I am hopeful that there's another 10 to 20% decline in them because that would allow me to buy them all at major support levels. I'll give you an example. I use Cameco as the bellwether for me for uranium. If it was ever printing at 35, $36 again, it's around 42, 43
Yeah.
now. I would go in that room to the wife and on my knees and beg her to allow me to go back in and put more money in these things. Will it get back there? It's going to need a sell off in the general stock market too. But if these things do again, I think they're great. So I would say this, there's a 10 to 20% further down risk now, but the upside now is greater than the downside. So if you've been in and you've ridden it out, which I'm certain some people listening to you have, my only concern is this. I think your portfolio needs to be overweighted into producers, potential near-term producers, and of course the people that physically own it or work in that. I think the companies that are just starting to explore may have found this or that. They need to be underweighted in the portfolio, not overweighted.
Great answer, Pete. I like it. Let's move to copper. I want to hear your opinion for copper in the short term and in the long term.
So that was my pick for the new year as my favorite metal, even more than the gold was at the beginning. And gold has done better than I expected in the first half. I got no complaints about it, but it's done better than I expected. Copper, on the other hand, is trading just the way I had hoped it would. It's clear now and evident, and if you look back 12 or 24 months ago, there were still a lot of people predicting it was going to fall back to 2 or 250 or 3. And I kept saying that really basically on either side of $4 it's its low. And it's demonstrated that now without any fear now that $4 is the low mark for copper. My belief was, and I hate to say in the first half like June 30th, but mostly in the first half of this year, it will trade between 4 and 4.5 and build a base that will allow it then to trade between 4.5 and 5 into 2026. So far, that's exactly what it's been doing. I have to explain to people that we're going to need that type of price minimum in order for real new dollars to go into some areas of the world which are now far more riskier than they were 20 or 30 years ago, but still have potential to have substantial new deposits. I think a number I saw of only one or two possibly world-class deposits have basically been discovered in the last couple of years. So copper's argument tied into the electrification, tied into the nuclear, tied into just the growth in third world getting bigger, just is a very, very bullish scenario. And if you can find a handful of companies, one that I'm involved in that has both copper and gold in substantial quantities, it's the best of both worlds. Those are my two favorite metals.
Two favorite. What about silver? Is there any
Oh,
room?
I'll get a few hate mails again when I say this, but I love you too much not to say it. So I treat silver as like kissing your sister until it gets above 35 or $36.
Okay.
It doesn't make it bad. You want to own it, but I think it takes it takes a back seat right now to gold. But I think part of it will be when it does break through that, it'll start to outperform gold. That'll be the third and last stage of the bull market, but we're not there yet. And until it does, I have to tell you, and there's some good people. There's still a person that was around when I was 30 years ago, still talking about silver. And it's been the most optimistic retail metal focused on, but is yet to deliver the big numbers that people have spoken about. And I listen. I understand that, but right now I think until it breaks out, I'm going to wait to own it in a big way.
Okay, final question. You emphasize the general markets as an important factor. Of course, it is important factor. But what do you see in 2025, 2026? Do you see some mild correction or you really see some market crash that will drag all commodities, all stocks down?
So tomorrow I begin my 42nd year in and around the financial arena. and I say this out of love to you. I really do. I really love what you do. I watch every single program that you do.
Thank you.
Those of us that claim we look into a crystal ball to see the future, the only thing we become experts at the end is how to eat a lot of broken glass. So no one knows the future. Some of us may be able to make a better educated guess than others. And that's what I'm doing here. I'm going to make an educated guess out of
Sure.
experience. It's been my argument here in the United States that America entered a few years ago its worst ever economic, social, and political era. I think we have awful problems, terrible social, economic, political problems. Some now think because of Trump's election, many of them be solved. I think it's even insurmountable for him. I spoke to you earlier about it, a debt crisis, a retirement crisis, and an infrastructure crisis. One of the things that's happened here, two things that are very, very important, is for yourself. If no one else listens, I hope you, my friend, listen. The stock market that I entered in 1984 in March no longer exists. In fact, for those that still watch that CNBC and they're broadcasting from the New York Stock Exchange, that might as well be a museum because even so little of the actual trading is done down there. But what's changed dramatically, and this is very, very important, perhaps the most important thing I can share with your audience. In 1984, 87% of the trading was retail investors. Institutions were 10 or 12 or 13%, something of that number. Most people went into the stock market for what it was originally created for, a place to buy and sell part ownerships of businesses. Last year, over 50% of the money now in the stock market is in passive funds. These are funds that are just basically tracking indices and indexes. They're not actively managed, meaning the manager, he or she, doesn't have discretion to sell individual stocks within them, but their job is to buy the stocks and sell, if it comes to that track that particular index. Give you an example. The great stock, Nvidia, 70% of the ownership of that stock is in these index funds. And these index funds are only acting on the basis of how the actual index is performing. So as the market has continued to go up and money came in, that manager could not keep that cash on the side or choose other stocks. They had to buy the stocks that made those indexes up. Well, guess what? Apple, there's 418 S&P 500 index funds. 410 of them have Apple in it. So as money come in, the guy had or she had to buy Apple whether they wanted to or not. That's why we saw one of the narrowness of the stock market when the small cap stocks have not gone anywhere. Now that's been very useful when the market's seeing market go up. But if it reverses, then it's going to add acceleration to the downside. That other half or about half that's left, 2/3 of that is in computer trading programs where people are buying and selling based on computer algorithms. Now, they may be just triggered because if there's a certain word in the headline news, or it could be very sophisticated using futures, options, etc., etc. The smallest part of the participation in the stock market now are individuals buying and selling individual stocks for part ownership of business. I think that's absolutely critical for people to know and understand. And people like me with gray hair or no hair that were playing the market 30 or 40 years ago, those things don't work anymore. That's the different species in that. So I think that's very, very important to know. Now, on that basis, because I think things are going to become tougher and all, I think the Biden administration used smoke and mirrors. We have a much weaker economy. We're starting to see those things and all. I think as stocks start to roll over and all, those fun things are going to see net selling, and that will accelerate the downside. Now, I don't believe in a crash. I don't believe we will have a crash like we had before because there's mechanisms now to prevent such a dramatic fall in such a short period of time. But I think the market will grow weaker. And as it grows weaker, that'll cause some money to come out, and that in itself will create more selling. So my argument is that basically the market has been priced for perfection. It's basically reached the level of valuation which is at extreme, And most of the risk now is to the downside, not to the upside. So I rather focus in a place, when you asked me before you sold some physical bullion, the most undervalued, crazy as it sounds, is junior resource stocks right now. And I'm not telling people to sell IBM or their bonds and buy a junior resource stock, but I am saying, to answer your question, the general equity market for me. Now, my advice to I'm still part of a planning group here in the U.S. We're part of a bigger group that has over $1.6 billion in management. And what I've told those people at the beginning of the year is, if you're going to be in stocks, choose markets outside the U.S. I was very bullish on Asia, particularly China. I don't like the U.S. or Japan. And so I would look elsewhere. I think Canada and the United States equally have very big troubles ahead economically. And Canada needs a change just as we've gotten here. Not to say that Trump is the answer for everything, but another 4 years of Biden or Biden's replacement, that would have been the destruction of the United States as we knew it.
Yeah, what can I say? Brilliant chat, brilliant interview. Learned a lot. My viewers will also learn a lot from this interview. That was Peter Grandich. Pete, thank you for coming to my show. I look forward to host you every time, and look forward to see you again very, very soon.
Well, thank you very much, and I'm going to keep it to your word about helping me get to the island of silver sometime in 2026.